Okay guys, let's get started. In this first example, we're going to be taking a look at a crude oil short setup. The learning points for this particular slide and trading example are focused on the multiple time frames that the opportunity occurred on, a big drop in price from the area that we were looking at, and then those two things coincide with a previous day close price level that we use as an area where we can potentially see turning points. And that's why we look to those previous day close and opens, previous day highs and lows, the overnight levels, etc. We can lean on those areas if we get the correct chart pattern and price action to go along with that. And of course, it has to occur on multiple time frames. So let's go ahead and take a look at the slide with the actual example. So in this particular example, you can see again that we have two time frames. We're looking at a 1500 tick bar chart and a 15-minute time bar chart. The short entry was back up above 46.46, which was again corresponding with the previous close. So you can see the previous close right in here. It's not marked on here, but you can see that the previous close, 46.46, was up in this area. It was within this price structure. And we're seeing this on two different time frames. We're seeing the drop in price that we referenced earlier, the big drop in price. Also noting that sellers had come in from this area. It was either a lack of buying or selling that pushed prices down from this area. And prices, after dropping, based out and had not gotten back up into this price level until our entry, and that's what we were looking for as the entry. Notice the size of the drop from this level. It's a nice big move. Just like you had a nice strong move from here, you can see when prices pulled back to that, you got a nice rally up out of there. In this case, we were looking at the short example just because of a few other things that we're going to talk about. But before we get to that, notice again, this is on two time frames. The origin of this area, this drop in price, had a big drop away from that level, indicating that there was more sellers or a lack of buyers. And so we needed price to rally back up to this area before we took a short. Those are the highest probability, highest working type of short setups when you overall in a big picture are showing weakness. So the market environment is showing weakness, and you get a rally back up in price to an area where sellers were previously there. And you can see that from the big drop, the big candle moves away from that level. Most of the time, you want to wait to short after a rally in price. You don't want to short after a drop in price. If you tried to short down here, you would have got stopped out. In this drop itself, it's going to be very difficult to hop on board this opportunity unless you're simply waiting for a break of the lows with an order sitting there, or you go down to a smaller time frame. But that could, get a little more advanced for most people and get a little too noisy on those smaller time frames. So the best opportunities for shorts are going to be in a weak market environment with a rally back up in price to an area where sellers were previously at. And so that's what led to our opportunity here that we have. Once prices dropped out of this zone, at an inflection point or at a price level that we look at that we know can produce turning points, the previous close, the opens, the highs, the lows, etc. So we have two things working for us. Big drop away, previous close, plus multiple time frames. So that's the basics of what we're looking for in this short setup. Now to get a little more advanced, we're looking at, what the profit targets are. Profit targets, again, are going to be, something that you set on yourself based on your rules, account size, trading plan, etc. But, you want to have at least a 2-to-1, 3-to-1 risk to reward ratio. So in this case, let's say you short at 46.44, stop above this swing high, so above 60. So you're looking at 15 to 20 cents in crude oil. 150 to 200 bucks. The first target is going to be back at this open area, 45.94. That's the open for this daily candle. You don't see that here. These are the smaller time frames, but that is the open. So that would be a profit target for us. So 45.94 from this 46.44, you're looking at 50 cents just right there. So that's more than a 2-to-1 risk to reward ratio. Now notice the previous day low is highlighted here as well, and that corresponds with this big green box. This is the previous day low right here. You can see that right here. And why is this highlighted? Well, you can see that prices turned from here. They stopped going down, rallied up, based out, came up to our short entry, and then shot right through this low. Why? Well, there's nothing to stop prices once they got below this level. And knowing the market environment that you're in, which is in a bigger picture time frame, a weak market, we can expect lows to get taken out, because that's what happens in a weak market. Lows get taken out, highs get respected, and that's what develops a downtrend. Lower lows, lower highs, lower lows, lower highs. That's the definition of a downtrend. So when you're shorting and looking for a profit target, a bigger picture profit target, and that's something else that you can use is higher time frames to find these bigger profit targets. But in this example, I wanted to point this out because there's nothing to stop prices from dropping below this. There's nothing left of this. Now you can scroll back and go in bigger picture time frames to find that, but in the immediateness of this trade, once this low was broken, there was nothing to hold it up. And so you're going to adjust your profit targets accordingly. You can have a trail stop where it follows, through the moving average, or follows a tick value. But this was ultimately a profit target as well. You could take it right above the previous day low. There are times when prices will come down, hit that, and then bounce. So you always want to take your profit a little bit before these levels. So again, big profit target, big drop, multiple time frames, the previous day close area. That's what we looked for and got in this trade setup. Again, this is on crude oil, but we look for these type of opportunities in any of these futures products out there. The same things apply. It's the chart patterns and the price levels that we're looking for and the price action that dictates what we deem as an opportunity. And you can see taking those three things into consideration, that's where we got this short setup. And again, if you need to review anything from this particular trade, this setup, understanding why we're looking at these things, review section 2 and section 3 of the Derivatives Day Trader course. Let's move on to the next setup.